All right. Okay. So welcome everybody. It's me, Hollis Full of Love, CEO and founder of Crane Financial. I'm here with two of my friends, Mr. Rich Wimberly and William McLaurin. So basically what we want to do is talk a little bit about some of the stock market effects from COVID-19. On social media, I saw a lot of people post and ask, like, what stocks should they be looking into, or how could they get involved in the market as like unexperienced investor. So I figured it would be good if we used to have a discussion around some of this, especially with the current environment. So I'm going to let y'all introduce yourselves a little bit more, too. Go ahead.
You can go ahead, Rich, because I really don't know what this man want me to say in this introduction.
I'm Richard Wimberly. Been investing and been kind of growing and trying to expand my knowledge in financial literacy over the last 10 years. Been taking it more serious probably the last 5. Got my MBA in finance and hit a realization that my income base is going to grow, and I don't know anyone in my family that knew how to manage money. So I took it upon myself to be that person to forge a path and also create generational wealth and teach others how to do the same. So that's kind of the passion in my life right now. So anytime that I can help others not have to experience some of the mistakes that I did early on, I would love to do that. Rome can also tell you we kind of treated investing like a college tuition. We spent a lot of money on ourselves to gain the knowledge that we did. So, if we can help people without having to spend that time and money that we did, then this will be successful.
All right.
William McLaurin, Indiana University, Bloomington, accounting and finance double major. I think I've been investing since 2013. I actually have a book out, Stock Trading Blueprint. I do this for real. I want to say, I honestly, God, I feel like since I've been investing since probably 2015, I beat the market every single year. And when I say beat the market, I beat the S&P 500. I guess I have a passion for money. I ain't gonna say I have a passion for stock investing, but I just have a passion for money. So, anything that falls under that umbrella of money, I'm almost with it. That's really all I got to say, man. If you got questions or whatever, contact me. I was full of love. Man.
Don't contact me. Yeah. But nah, so stocks is not really my thing. I tell people all the time, that's not area of expertise to me. I learned the stock market from these two people here on this video conference. So I figured these would be the two people that I would discuss it with, because people obviously with Crane Financial, the word financial being in the name, people are going to reach out to me for anything involving money and business. So if I can help educate in any way, shape, or form, I'm going to try to do that and pass the ball. Like I said, my man, William McLaurin, Stock Trading the Blueprint, you got to get that book. Very insightful, very helpful. But just current market conditions, things that's been going on, let's get into it. So you talked about beating the market every year, right? The S&P 500 closed down for Q1 2020 at 20% down. That's his biggest decline since 2008. The Dow was more than 23% for the same period. Basically, we're seeing that we're dipping into some of the trends that we saw during the recession of 2008 and previous recessions as well. With that being said, a lot of people, as soon as the COVID-19 hit, in terms of a mass setting in the U.S., people lost a lot of money in their 401ks and people start panicking. So starting off, let's say my 401k is down 20% on the year. What would you guys recommend someone do?
You can go first, Rich. We'll just keep that same format.
All right, that's cool. I would say first thing, if you're blessed enough to not need liquidity in a time like this right now where you still are gainfully employed and you have an emergency savings, then I would say that you shouldn't be paying attention to the conditions of the market right now, period. So if your 401k is down 20%, unless you plan on retiring in the next 3 to 5 years, which is about what the typical time to recover from a recession or bear market is, then it really doesn't matter. Just continue to invest in it. Over time, the market grows. And you don't want to try to put yourself in a position where you're trying to time the market. You pull your money out and then you have a ramp up and now you miss the boat. So I would say for at least people in our age range, if your financial situation is one where you're comfortable, I would say don't pay attention to your 401k. If anything, reallocate more of it into growth stocks, into large indexes, and move out of those bonds and some of those emerging market like allocations. Other than that, I would just say set it and forget it. You're a value investor in your 401k, so you shouldn't be looking at short-term windfall.
I agree with Rich. If you have to sell, and that's just the way how your life is going right now, then I mean it is what it is. But if you're not, you definitely shouldn't be selling right now. If anything, you buy when there's blood on the street. Me personally, if I were someone's advisor or something like that, I would tell you, like, it's 2020. Technology seems like that's the future. That's the way we're headed. The S&P 500 would be a great thing to put all your money in or whatever. But, the NASDAQ, to me, it grows faster right now than the S&P 500. The S&P 500 has done, I think, on average, what's the stat, 12% since the Great Depression? Like, on average, every year.
Yeah, every year.
And with technology being, like I said, that's the future. That's where we're headed. I like right now, we're on Zoom. So we're having this conversation, this teleconference. So, I think that would be a good place to also put some money. You put it in the S&P 500, NASDAQ. You don't have to really worry about it. Like Rich said, it's going to grow. It will grow over time. If you don't know a thing about stock, it's safe to put your money in S&P 500 and NASDAQ, and you could really turn your back on it. But I would also add in, you should only be invested with money that you can turn your back on, because a time like this is when you may have to sell at lows and you might take a loss.
Right.
So just be smart with your money. If you have, this much money that you can put to the side and you don't need it, and it's you have your money allocated in the correct fashion, and you have the freedom to do what you want with your money. Make sure that you invest it in the right way. Don't try to buy high, ride the wave. Don't try to time the market like Rich said. You'll be all right. NASDAQ, S&P 500.
So in terms of, I can speak from a tax standpoint, in terms of the 401k, let's say you are down and you are thinking about pulling that money out. The IRS has waived it's usually a 10% penalty if you're under the retirement age, which is 65. They have waived the penalty for the 401k withdrawal up to $100,000. And there's a 3-year period to pay that money back. So you have 3 years. If you wish to withdraw any money from your 401k, you have 3 years to put that money back in before you have to pay any taxes on it. And there's no penalty involved in it. And if you can't return that money in that 3-year period, then you have 3 years after to pay it back. So it's advantageous. It's advantageous to, have access to that money right now. If you have any smart avenues you want to invest in, I would say go forth in that. But I like what both of you guys said. Now it's not the time to really look at the 401k as, oh, my life is going to be over if you're not up retired.
I also like to add in, I don't think that people should be freaking out. Like, I feel like our age group, of course, we lived through the recession, but we weren't investing in the recession. If you're an older person, you're seeing this, like, this is not the 2008 crisis. You know what I'm saying? That was like a true banking crisis. Like, that was huge. Like, that
was based off bad practice by the
like, that was financial. That was really a true economic failure. You know what I'm saying? Like, this is not the time. That this is totally different.
Okay, so my next question was going to be, in this climate, would you say that, it's time to weather the storm, wait for market correction? Would you sell and take a loss, or are you telling people to buy more stocks because it's cheaper now since everything is dipped down in the last quarter?
Rich, go ahead.
We loading the boat over here, man. You really, they say that you get like these once in a generation buying opportunities, and this one is ours. Like, on our generation, like Rome said, we didn't really get the trade in the 2008 recession.
Right.
We may not see a 25-30% pullback again in our lifetime.
Right.
This is our one opportunity to take advantage of discounted stocks and really, do what Warren Buffett said and buy low. Like, you don't get too many more opportunities. I mean, this time, 2 years ago, me and Rome were evaluating stocks at the same price they are at now.
Right.
So in theory, like, if the stock was valued at this 2 years ago and they didn't grow at all over these 2 years.
It's almost like a cheat sheet, bro. It's a cheat sheet.
Yeah, it's unbelievable, man. It's unbelievable. Like, the stock could have not grown over the next 2 years, and it's at the same price. Like, you got to take your shot on that.
Right, you got
to. But
to.
if there is a stock that was the same price and it went up $300, you know what I'm saying, before this pullback, is like, it's almost, you know what I'm saying? Like I said, I feel like it's a cheat sheet.
Well, you gotta go deeper into that. Explain, why is it a cheat sheet?
So I look at it as, and this might not pertain. Some companies may have failed due to, bad practices and, failing financials, et cetera, a downturn. But let's say that there was a stock that was, let's say NVIDIA. NVIDIA probably, let's say like a month ago when the coronavirus stuff hit the fan, NVIDIA might have fell down to like $150.
Okay.
This is a stock that was at once $275. It's technology. This is their decrease. The price decrease was not due to like, an actual problem with the company. This is solely coronavirus. Right. So when you look at something like that, it was $150. It is already shown you that it can get to $275. And if the economy was to continue to, progress and do what it's supposed to be doing, it can go higher. That's what I'm saying. It's a cheat sheet because it has proven that, hey, we can go, to another level. We can take that step up. We can go up $100 a share. You follow me?
But are we looking at it though? But let's look at a whole scale, right? So that company you talking is a solar energy company, tech company, right? So are they private? They're private, but it's not private. It's privately funded to begin with, but now it's a public company, right?
Okay.
Okay. So with any private investment, would we have to worry about the company losing money and slowing down on what it's projected to do over the next five to 10 years because of what we're facing right now? If it's a 6-month period where they have to shut down everything, how would that affect that company over the next 5 years?
So I think it depends on the industry, but specifically with NVIDIA, right? Data centers are in huge demand right now because of telecommuting.
Right.
So a company like NVIDIA, which is making computer chips, which makes the chip that's inside of your Xbox, like the demand on these types of discretionary items are big right now because people are at home and they don't have a lot to do.
Right.
So people are buying computers, they're buying Xboxes, and then data centers are being used. I think in China, they said during their shutdown, the data centers actually couldn't keep up with the demand of the people that were working from home during the shutdown.
Right.
So that's one stock where like the dip wasn't deserved. Not only that, at the 275 that Ron was talking about, NVIDIA's never missed an earnings report. Their balance sheet has always looked good. They always meet their expectations. So I honestly just trust their accounting principles and just say, if they are going to have a tough quarter, they're going to tell their investors it's going to be a tough quarter. Right. You can trust them when they say that, and they can probably have a good plan for recovery. So I'm long on NVIDIA right with Ron.
Okay.
To go back to what Richard said, loading the boat, I'm ready to load the boat, but I'm still on the sidelines personally because solely because the COVID-19, I don't know exactly what may come of this, how long the lockdown will last. I don't know. I guess there's too many uncertainties. I don't know what the effect will truly be. Because, let's say I go outside today. It's nice outside. People are all out. You would have swore that, the coronavirus wasn't even out here. People are still trying to go to stores. You know what I'm saying? So because I don't know if there are certain places, though, they might be where I'm scared to go outside. The streets might be a ghost town. You know what I'm saying? Right. Like, so from what I'm seeing and where in my little bubble, you know what I'm saying, of where I live at, it seems like coronavirus isn't really even to be thought of. But I mean, you might see people with masks on, but it's like, you're still in the street. But I'm looking at it as you don't really know the true to what extent that this will affect stocks. So I'm still on the sideline. I would rather wait.
Weather the storm.
Miss a little bit of it and then catch the ride up than to buy now. And then let's say earnings come out and guidance is way down. They just give us some terrible news. And then it's like, man, I bought up here when I could have got it down here. You know what I'm saying? And I get what Richard was saying, like, you don't want to time the market, but it's just one of the things where, like I said, if I got to invest my money, I don't really want to wait for it to go down and then come back up. I kind of want to be catching it. And at a time like that, I want to go on a rise. I want it to be that, hey, when I put this money in there, it's time for us it's showtime. You know what I'm saying? So I would rather wait.
And I want to go back to what you said about earnings reports, right? So it's April 7th. Q1 ended on March 31st. If I was a novice investor, somebody that's just looking to get into investing, when would I be looking for earnings reports to review for Q1? Right? Q1 is going to be bad for everybody. Everybody's probably took a hit towards the tail end of Q1.
I would say earnings reports and whatnot, definitely this month, but some people are like a month behind, so May for sure. I think all Q1 should be out. All Q1 should be out. Okay. And that's it's also kind of cyclical, so, but May, it should be like you should know what's going on.
Yeah. Exactly. But in that earnings report, what you care about is not how big of a financial impact it had during that quarter. What you care about is the guidance. It's what do we think is going to happen in quarter 3 or quarter 4? How long is it going to take us to recover from what happened? So for me, the reason why I say I've already started loading the boat, and in many cases, it's just me positioning myself for a target price that I'm looking for. It doesn't mean I'm actually opening the position yet, but I'm looking at the stocks that know how to manage in a crisis. So that's why I've already opened a position in Ford, because I remember in 2008, Ford didn't want to take a buyout. Right. They knew how to manage themselves throughout the crisis. So I think that leadership team knows how to do that again. I look at Boeing. They're also saying that they're not willing to take the buyout. Now, the financials look terrible right now, but we do know that the government is going to have to support Boeing if it comes down to it. So to me, that's another safe haven stock. Over time, you may get beat over the next year, but over time, that's another stock that I know throughout a crisis is going to be safe.
Okay.
Now, do they have other issues? Sure. But yeah.
I mean, to me, Boeing, their debt, they had a buyout without a buyout. Like, you know what I'm saying? They got a bailout without a buyout, without a bailout. So,
I'm speaking specifically on coronavirus issues. Yeah. Now, if you want to talk about 737 MAX and the windfall of that.
They have debt of what was their total year revenue. Like, that was crazy to me. They took out the same loan for like the entire year. So that was crazy. But
yeah, that is wild. That's wild.
That's wild, bro. That's wild. And I guess Ford, I mean, and I don't want to say, we all have our different opinions. So I'm not really going to go into, how I feel on every little stock. But financials are huge to me. When I see too much debt, to me, you know how, like what Rich was just saying, like, their management team or everybody, they know what they're doing and how to manage in a crisis. To me, Boeing did the exact opposite. I don't really have as much to say about Ford, but to me, Boeing, I wouldn't touch.
That don't feel like a safe bet to you.
But the government, like he said, the government is going to make sure they're taken care of. So they will.
Too big to fail.
Yeah, they're too big to fail. But at the same time, that, like, if I was whoever makes the decisions of, Boeing, I would definitely be looking to fire somebody. Like, somebody got to go. Somebody got to go.
Yeah, no, I do agree with that. I'm thinking, remember, we're talking to people who aren't going to invest in something for 1 year to 3 years. Yeah. We're talking over the long view, 15, 20 years. You're going to
make money on Boeing at these prices over in the next 5-10 years. It's just
exactly, yeah.
It may not
but
be
I do agree.
A quick return.
It might not be time. Yeah, if you coming into Boeing and you like, ooh, it's $140, I'm going to get in and flip this to 180 in 6 months, that's not going to happen.
It's not going to happen.
No. It's going to be $100 before we see that, but yeah.
Right, yeah, I agree.
Okay, so I like you said that, Ron, so it could go down. So based on you guys watch the market, I've known for, like you said, past few years, right? Based on where things are now, even looking back on previous periods like the recession of 08 or 87 or, whenever, do you think it's gotten as bad as it can? Is it smart to even look back at these previous recessions? Because like you said, 08 was more of a bad practices from the banking industry and the economy as a whole. This is a health crisis, right? And it's something that we can't predict when it will end or what the long-term effects will be.
Yeah, or like the internet bubble and all of that stuff. Like, I don't feel like you can look back at like those past situations just because it's kind of apples and oranges. This is just a random outbreak. Like, this is truly out of the blue, you know what I'm saying? Straight
natural phenomenon.
So, yeah, so and even still like I said, in my bubble, people are still out and about. They going around car wash, going to eat. And if the restaurant ain't stopping them from going to the restaurant, they going. If unless the business is actually shut them down and stopping them from doing it, they still out and about. At least in my bubble. So, I don't know about.
Yeah. Would you say that might bowl to the question on, has this gotten as bad as it can get then? Because if we're to believe what we see on the news about how highly infectious this disease is, and in your bubble, as in mine, or talking to people that live in different places of the earth, they talking about how people still going outside. This thing could get way worse than it is right now. You know what I mean? Way worse than it is right now. And
it really depends on what you mean by worse too. Like, could more people contract the virus and more people die? Hell yeah. But if the impact of the virus is that the businesses are shut down, they open the economy back up. That's what's causing the problem in the market, is we don't know when regular consumer spending will start back up again.
Right.
That's what's so scary is we don't know. We don't know how long this is gonna last. When the housing market crashed, it wasn't like people stopped going to work. It wasn't like, oh, I can't go to the movies no more. You can still go do regular things and put money into the economy. In this one, we literally are pumping money into the economy, but it's not going to consumer spending. It's going toward creditors. It's to pay your mortgage and like this is way different. And in the dot-com bubble, like that was just that actually had no impact on regular people.
Right. That really hit the tycoons more than anything. The people that was trying to get in for the quick .com thing, or people that was making like Mark Cuban, right? He made a website, sold it, made a big amount of money, but a lot of people lost on those ends because those websites ended up being nothing. You know what I mean? They went public and ended up being nothing.
Yeah, it's kind of like what happened with, the weed stocks a few years ago and the cryptocurrency stocks now, where it's like you don't know which one is real and which one is not. That's how the .com bubble really happened.
So based on that, like you said, we don't know how long it's going to be. Because it could be a situation, like you said, people still going outside, people still living some resemblance of a regular life. And some people, even in our situation, who may be still gainfully employed or may have had, even if they lost their job, they may have had an emergency savings. That money can run out over the next 3 to 6 months. It might not be any more discretionary spending happening in the market at all. But with that being said, we talked about tech, we talked about Boeing. What are some safe bets, or is there any industry that you guys feel like may be recession proof?
It's tough to call anything recession proof in this one because we're not in a recession yet. Like right now, we're just in a fierce sell-off. Overall, I mean, obviously like commodities, right? Like gold is supposed to be recession proof. Investing in bonds is supposed to be recession proof. But for me, in our age group, I don't think that we need to invest in those vehicles. I think it's over time, we know the market's going to grow. So it's really about, like what Rome said, looking at the financials of the stock and looking at the book value of it and saying, like, do I think that they're going to recover to the growth that they had previously? And if that answer is yes, then you buy the stock and you make money over time. Like, I don't think you try to overcomplicate it by, trying to figure out which stocks are recession proof, which ones are, because it's so complicated. Like you could say like an Amazon is recession proof because everybody is still shopping on Amazon.
But when the money run out,
there's that. Then there's also, what about Amazon Business and all the people that are selling things on Amazon that can't sell them anymore because they're not essential goods? Or AWS, like startup companies aren't investing and spending money on cloud services right now because they're trying to figure out how to pay their work staff.
Exactly.
So it's so many layers to like each of these companies. Like it would be difficult to say who's recession proof and who's not. I would just say, invest in the market long term. That's like the best way to look at it.
All right. Well, my synopsis. I don't think that any stock is recession proof. All stocks, to me, in a recession, in a true recession, all stocks will be pulled down. The market will pull even a great stock down. Same thing. The same kind of things that we're seeing now, where you see good stocks being pulled down. And to me, in a true recession, all stocks will fall. So my thing is more so when you're in a time like this and you have a situation where you have the opportunity to get cheaper stocks. If I'm the investor and I have the finances to do so, I would aim for blue chips. If you have the money to buy an Apple.
Explain what a blue chip is, bro.
Explain what a blue chip is.
This is my definition of a blue chip. It's rock solid. I'm not worried about you going out of business. Your finances are good. I see I see your product or your service or whatever it is every day, every other day. Like Coca-Cola ain't going out of business, right? Apple not going out of business, right? Nvidia is probably here to stay. You ain't worried about Ford going out of. You know what I'm saying? Like there are certain stocks, MasterCard, Visa. There are certain stocks that are like, I'm not worried about that. So those would be the stocks that I would say that when you are in a time like this and you have great valuations and the numbers are looking really, really good, and it's like Rich said, a once in a lifetime opportunity to get it at those prices. Those are the stocks, to me personally, that I'm aiming for. Like on my watch list, I have Apple, I have Lululemon, however you pronounce it. I got Philips, MasterCard, Visa, Intel, Ulta, like certain stocks that I like. They took off and I missed them. You know what I'm saying? But now that I'm like, I won't even say I I missed them. I didn't have the money to, invest in a $200, $300 stock. But now I have the, the financial freedom to do so. So those are the kind of stocks to me personally that I would be able to.
Let's talk about one that really interests me. I want y'all to opinion on this. Facebook, right? And I only say this because Facebook is something that, from a consumer standpoint, is free. It's tech, right? People's usage on social media is probably higher than it's ever been.
No, grandma got Facebook.
Exactly. And people are watching Instagram, not even just Facebook, but Instagram. We've been seeing hundreds of thousands of people on Instagram Live just watching or creating content because there's nothing else to do. But if I look at Facebook stock, it's at 168.83 right now as we speak today, right?
This is a perfect example of why it's so complicated. So all of the things that you talked about on Facebook right there are free. How does Facebook generate its revenue? Advertising dollars, right?
And I'm not going to spend, as a person that advertises on Facebook, I'm not going to spend as much money if I'm not making any money because my business is closed.
Yes. Facebook makes a lot of money off of small business owners.
Yep.
And how did you know?
They got plenty of my money. They got plenty of mine.
They got plenty of mine too.
This is not a time to be spending money in advertising if you're a small business owner. So it's complicated, man. Like I would say, long term, yeah, Facebook is a good value, and maybe it's a fair price right now, but we don't know what the impact will be to its advertising costs. Between Facebook and Google, they own 60% of the advertising market share in the digital marketplace.
Wow.
So they are going to be hit very hard on this. We just don't know what will be the magnitude of it. And what was already priced in, the drop that's already happened, was that fair? Was that a fair drop? And is it like, all right, now we're getting this at fair value? Or is it still to a point where it's still being overbought simply because people think it's at a discount?
Mm-hmm.
So I think Rome is kind of right on, we got to see what's going to happen a little bit more first before you can determine which stocks are at the right value and what's the right.
You couldn't tell that from the market right now, though, because I know people be like, they jumping in, grabbing it, any and everything. You don't even know when this is going to end, brother.
Well, the people don't even really know. A true recession means that you have, 2 consecutive quarters at a loss, correct?
2 consecutive quarters of negative GDP, bro.
So we only really have seen 1 quarter of that in Q1, right? We are in the very first few days of Q2 to even be able to call and see where we're going to be at. You know what I mean? I
don't think I would jump to call. Even if we do see this next quarter, I don't think I would jump to call this a recession. Just because
of the scenario?
Of the situation. Yeah,
right.
The scenario.
Because if all things perfect, we wouldn't be in that situation, what you're saying.
Mm-hmm. If this random out the blue virus just didn't go around, we
wouldn't even be experiencing this.
We'd probably be 3,600 in S&P 500. So, yeah.
If they open the economy back up and we see negative GDP growth in quarter 3 and quarter 4, this is a recession.
Yeah.
For a full year.
Yeah.
But I look at it. See, what I'm worried about is, it's that trickle down effect. Y'all know how I go into my hole. You know what I'm saying? If it depends up here,
right.
This person can't work. They start missing they bills. They start missing their mortgage. They can't pay that condo. They can't pay that. They can't pay their bills. So now you lost your house. It's just that down slope, and that's what I'm worried about.
April 15th is going to be a big day because that's when we get the creditors report to see how many people made their mortgage this month and how many people didn't. That's going to be huge because then we're going to see the first wave of this. Like we're starting to see the unemployment rates rise. We really are going to see how many of these people have, 3 months of savings, like of their income to pay their bills during this time. I don't think it's that many.
No, it's not. I mean, most Americans can't even withstand a $400 emergency, so I doubt that many people have 3 to 6 months saved up. You know what I mean? We blessed that we can and we do, but like these are situations that I remember you guys tell me all the time. We waiting for the recession so that when it comes, we can stack up and really, like you said, it's a once in a generation type of opportunity.
I don't want no recession, bro.
No, me neither. As a small business owner, this is not what I want at all. Because
I don't want that at all.
The more the tighter people become with their pockets, the less they're gonna spend money with me and my company. You know what I mean? So that doesn't help me in any way, shape, or form. And I even think,
I think the politically correct way to say that is we were looking for a market correction. in a buying opportunity.
Right.
We don't
True.
want people to lose their jobs.
No, yeah, you don't want nobody to lose their job. You don't want anybody to be without. Right. That's not what you was looking for, opportunity to buy in the market, not for somebody to be harmed. Definitely.
Yeah.
Definitely. But even from a tech standpoint, I think about it, living in the Bay Area, being familiar with the job opportunities. January, February, March, I was getting January, February, I was getting emails offering from startup companies every day, right? I haven't gotten an email about a job in about 2 weeks. So I sit and wonder, if they stop hiring, at what point are they going to start firing? I'm talking about the companies that haven't went public yet, that are private-owned companies that have private investors, whether it be, number 1 or 2 of them, or one of the billionaires going to start saying, all right, now I'm holding my money.
When they can't pay their bills.
Yeah.
When they can't pay their bills, people are going to start losing their jobs.
Right. So it's going to be.
It's definitely starting to happen already. So I'm in this app called Blind, where it's anonymous for like employees who work at tech companies, and a lot of them are starting to share that their companies are starting to lay off. Like Airbnb has laid off people.
I actually know somebody that's lost their job already. Like that.
Yeah, so it's starting to happen. Salesforce did some layoffs. And then the onboarding piece is also a challenge because like it's hard to start a job when everybody's working from home. Like, how do you give them a good onboarding experience? And then you paying them for, the first 90 days of their probationary period, and like you're not able to formally train them on what the job expectations are. So,
well, we probably gonna see a lot of jobs change and become more remote. This might be the shift into what we talked about, automation and robots taking your jobs, or everything just being more remote. Like, I think if anything, any good company that's operating at a high functionability right now, they're gonna look and see like, why are we even housing people that come in and work every day? How much is that gonna cost me? Like for me, my cost goes down when I have my employees working from home as opposed to being in the office, right? Because that eliminates the rent I have to pay. That eliminates me having to buy lunch for everybody. Not that you have to, but that's something that you would do as a good employer sometimes, right? That would eliminate a lot of the just utilities I got to pay every month. A lot of those things that's come out of my pocket are going to disappear because people are doing it from their own homes, right? So it'll be interesting to see that as well, and how that's going to affect the economy as a whole. More people just working from home.
As a good employer, that we could have a whole conversation on that one too.
as company practice, I try to bring donuts. You know what I mean? I'll buy lunch or something like that. Take care of people. I'm trying, man. I'm trying. They work hard for me. I'm gonna work hard for them.
Rob, you don't be feeding your team, man.
Of course, I'll take care of my people. I do the best.
Okay.
I'm just saying that there's a lot of companies out here that are really cutthroat. They don't care.
Oh yeah. For sure.
For sure.
I was talking with a client today, and they asked me about why these larger companies.
I'm sorry, people. I threw them all the way off. But yeah, go ahead.
Yeah, it was a larger company doing layoffs, and they're like, I know we got money. Why are they doing? I'm like, man, my bottom line might not be if I make it or don't. It's do I want to keep my 10 billion I got in reserve, or do I want to start paying to people that's not producing for me? You know what I mean? And that might be me looking at it like, no, I'm gonna keep my money. Y'all go ahead and mind y'all business, especially since they got the government gonna give you all this free money.
You're gonna get slandered, boy.
Nah, I wouldn't do that. That's not how I operate. I kept all my people on payroll. Everybody that worked for Crane Financial, they still solid. You know what I mean?
Right.
But I wouldn't do that. But I'm saying that's how other business owners might look at it. It don't really matter how much money I got. I'm not trying to take millions of dollars of losses to pay people that's not producing for me right now. You know what I mean? So,
but you also got to think of it. You own a company that, even though it's small, it's functional. You're flush. You're good enough. Now think about the companies that are tight, that were barely making it before Corona. So now,
we in that group too. You know what I mean? We tight.
So at that point, then it'll get ugly.
Yeah, I mean, for me, it's more so of as a business owner, it's more so of the moral standpoint, like. How am I? These people, because as a small business, your employees are taking just as much as a chance on you and your vision as you're taking on them, right? Yeah. So if they've been willing to ride with me through these times, and when we was just getting started, then we're gonna have to keep rolling together, no matter how tight it get. You know what I'm saying? We're gonna have to keep doing this because at the end of the day, I think that's gonna build camaraderie and trust throughout the team. You know what I mean?
Increase their morale. I follow you.
Exactly. So I'm going to apply for my small business loans. I'm going to apply for my payroll protection loans, and I'm going to make sure they continue to get paid. Even if it's outside of the normal tax season, we will find other things for them to do. We will find other functions for them. Just try to offer some help. You know what I mean? Because times like this, like you don't want to just lead. The people will start becoming wolves if you don't feed them. You feel me?
Yeah, very much so. I'm praying to God I don't have to cancel food.
Yeah.
That's my baby. I've been nurturing that little thing since what, September.
Yeah.
I even had the event put together in time to put it in the tourism big guys. So I'm like, yeah, this supposed to hit this year. So
yeah,
I'm hoping that Corona, it phases its way out.
No, it will, man. It will, and all our ventures are gonna end up working out the way they're supposed to. I got faith in that, and that's the risk you take in entrepreneurship. So it's gonna work out.
Very much so. Tax season taking care of me, luckily.
Yeah, for sure. That's the one thing. That's gonna be there. We'll talk about that.
Yeah, that's for sure.
That's gonna be there. Just to close this up, right? And get back onto the stock market. If I was a first-time investor or a novice investor, and I wanted to put some discretionary, I know it's a tight time for people, but if I had some discretionary income and I wanted to put it into the market, where would I look? What would be my resources? Is now even the time? Would you tell me no? Hold off, wait. Wait for it to start coming back up a little bit so you can catch that wave. What would you guys' advice be for a first time investor?
Keep the format. Go ahead, Rich.
Man, I would say as a novice investor, now is not the time for you to just be coming in trying to experiment. You got to really do your work on the front end. So make sure, for me, I always tell anybody who tell me they're interested in investing, I make them read Intelligent Investor first. One, the book is boring as hell, and if you read it, I know that you are
You're serious
about learning the material in here, right?
But
I think that's what we all saw.
It's boring, but it's essential. You have to do it. You have to read it.
Agreed. And then I think the other resource, not to just plug Rome's book, but after you read Intelligent Investor, which is dense, right? It's like the Bible. I look at Rome's book as like the cliff notes of what's an intelligent investor and then the things that he's learned over the time of his investing career.
Right.
I think those two resources are great. Like there's actually not a thing in Rome's book, and we disagree on a lot of stuff. There's nothing in there that I'm like, nah, Rome, I don't know about that.
We can fight like cats and dogs, but not the book, huh?
Yeah,
I've witnessed it too. Y'all really do go back and forth about this stuff. Just two very different perspectives.
Yeah, and I would say, you obviously got to set up, your brokerage account, leverage the research, like in on the interface. I use Yahoo Finance as well. Don't buy no subscriptions yet. Like you're just a retail investor. You don't need to be spending money to learn the material. It's a lot of free material out there. I think we were really big off of Zacks for a while and Motley Fool. So I would say start there, but Intelligent Investor and then Rome's book right after. And that'll give you a good foundation. But Rome, you can go ahead.
Well, yeah, I would definitely say Intelligent Investor, but the internet, I would have said Seeking Alpha back in the day, but they making you pay for everything now. Like,
it's a lot of paywalls now.
For research, huh?
It's a lot of paywalls now, man.
Yeah, like when I go on there, like normally that was like my go-to. Like I knew that I could go on there, and if I couldn't learn from your article, I could learn from comments. I could learn just how much you knew in your article from the comments, because somebody's gonna come in there and try to slander you. That's just normal. What I say, the haters in the comments, that's normal, bro. Like somebody gonna try to shoot you down. So
all day.
I would be able to, from Seeking Alpha, you could put together like your own thesis. But now, like Seeking Alpha, like, if you ain't paying for it, you see like the first paragraph and you can't see none of the comments. And with major stocks, like let's say a decent stock like Apple, you're not really gonna get too much detail about it because they just making you pay. So I would really just say the internet. You got to utilize the internet, because I can't tell a retail investor go read 10Q, 10K, because they're
not gonna understand.
That's not for you. You're not there yet. So
yeah,
I would say the internet. Just try to use the website. Maybe if you come across Motley Fool, a good article or something like that. But yeah, Yahoo Finance, that kind of thing.
As a person that has put together Fortune 500 10Qs and 10Ks, and that's not for anybody. Anybody that's reading that stuff, man, you are a savant. I hate those things. But if you're
trying to pick stocks, like if you're somebody that just wants to invest, that's why I say like NASDAQ, what is that? QQQ, or
Yeah, SPY or VFI.
That's
and
what
that.
you need to be doing. If you don't know stocks like that, you're not gonna manage it and watch it every day. You put your money SP 500 or NASDAQ. That's it. Turn your back on it. You be all right. You ain't gotta worry about it. You might not get 100% return in a year, but hey, you doing good. You gonna be all right. You gonna get you some 10 to 15s. You might get you a 5 in that day, but you might get you 30. You know what I'm saying? But if you're really trying to pick stocks, you're trying to be able to go out here and select, from all the different stocks we want to pick 20 good ones.
Mm-hmm.
You got to do it. You got to read them books. You got to read Intelligent Investor. You need my book because you got to be able to look at the financial statements. You don't want to buy. What was the example I put in my book? You got to look at investing in stocks like you loaning somebody money for their business.
Yep.
Mm-hmm.
And if you know that this person is a goofball, are you gonna want to goofball some money or somebody that's bad with money?
No.
And
the only way to know those things is by reading the earnings reports and getting it.
And you need them. And you need all of it. You got to be able to look at the 10Q. It's like another thing I was saying. Like it could be a company that the financial statements look great. It's green at the bottom. They got 100 million, but they had an unusual expense for $1 billion. And if you reverse that one unusual item, now it's this is not really a good. But that's the kind of things you won't find out unless you look at those in those actual footnotes.
And I think what you guys said earlier is we are in a unique period. We don't really know if this is a recession because all things perfect, the economy was booming great. We got to really wait and see. So this time might be the time if you really want to be a serious investor to go through these resources, read these books, start picking stocks at a smaller level. So 2-3 months from now, when we really can sit and navigate and say, okay, this is what's going on, you might be able to really jump in and get active and have an opportunity to make some money.
Yeah, I would agree with that. And then to Rome's point, if investing money is not just about investing the money, it's also investing your time if you want to pick individual stocks. Like we don't take a lot of shortcuts when it comes to evaluating these stocks. Even though we both been investing for a really long time, we still usually bounce an idea off of each other or off of somebody else that we've worked with in the past. And we
that's knowledgeable.
Yeah.
Weeks, sometimes months before we even determine, this is my entry point that I like. So if you're not willing to invest that time, invest in the market. S&P 500, NASDAQ. Earlier, Rome opened with that he's beat the market every year. There's a lot of people that will charge you that don't do that. That don't beat the market. So you can, if you invest in the market,
CPAs, CFAs, all that, they not beat the market. So be careful.
Right. So
that certification don't mean a thing, boy.
No, I mean you can take a test.
Yeah, you can take a test and pass.
Yeah. One last thing I wanted to ask, just real quick. We ain't got to get deep into it. So, let's say I was outside investor. Somebody introduced me to something called options, right? And we know options, you can buy calls or puts. And if everything is dropping, to me, it would say, I need to buy puts on everything. It's all falling down. Would that be something that works out? What are you guys' thoughts on playing options right now?
Me personally, too volatile.
You go first, Ron. My answer probably going to be longer on this one.
Yeah, I'm not playing no options right now. The market is too up and down for me. And it's not following what it's supposed to be. Like typically, when things are going bad, it's supposed to go bad. Things go good, it's supposed to go good. But just like right now, coronavirus ain't no end in sight. Ain't nobody said this is going to end and the market is up. And that's something that would have me frustrated right now because I would be down on my puts. So I'm not touching the market until there's stabilization and the market it's got to do one or the other. Otherwise, I need a pattern, and if I can't find a pattern, I'm straight. Go ahead, Rich.
Wait, real quick, Rich, before you go. What is your point of state? Because people going to look for this, and this is going to be important. What is the point that you see stabilization? Is it please provide what that would be for you.
All right. When we first started trading options, you were able to, I could, let's say like Amazon, I knew every Thursday the stock is going to drop $10 to $20, and on that Friday, it'll come back up.
It'll rally,
S&P 500, SPY. We were, what was it, Ponzi Tuesday or was it Wednesday?
Ponzi Tuesday.
We knew that, okay, you never buy on Friday because that's dangerous. But Monday, if you get a decent dip, you always buy that Monday. You ride up Tuesday. It might extend to Wednesday, but you knew caught a pattern. You know what I'm saying? It was
made a little money with y'all doing that. I remember those days.
It was calculated risk. You know what I'm saying? Right now, like Rich is playing options. This is gambling to me. That man is going to the casino every day with his money. So, in my opinion,
Agreed.
Yeah, he hidden right now though. So I mean, it could work for you because Ben is actually doing options right now. He making money. Now he ain't trading with a lot of money, but hey, more power to you. You hitting, but it's the negative side. Because everybody that does options, that's another thing. You and not get emotional. When I was trading options, you start seeing thousands of dollars going out your bank account. You like, that's red. I need to sell, but as you hit hours, you might have made some money. You know what I'm saying? So that's to me. If you can't pick a stock, I don't think you should be playing.
You shouldn't be playing. So no novice.
Like how this was, you were like, we were like helping you along. You got the guidance of somebody that knows what they're doing. All right, cool. But like if you can't pick a stock, you definitely shouldn't be playing.
I remember one Ponzi Tuesday, I made like $2,000 or $3,000 going against what y'all was telling me. Y'all was like, no, don't do that. Don't buy those puts. I'm like, nah, I'm gonna do it. I really think it's gonna work out. And I woke up the next morning and I'm like, oh, I'm up a couple thousand. This is a great day.
It worked like that.
Why you telling people that, man?
Got them
He
encouraging it.
No, don't do it. Don't do it. I have been studying for a little while before I did that, and I don't even do it now. I don't actively trade in the market. I have people that I work with that handle that for me because it's too much. You know what I'm saying?
You just froze or something.
Yeah, he did.
My bad, y'all. I'm in the hood. I got bad Wi-Fi.
It be like that sometimes.
All right. So what I was gonna say, if you have not already at least become like a master stock picker, you have no business trading the option. You also don't have business trading options if the amount of money you trade in the option, you are okay with that number going to zero.
Yeah.
You gotta, it is going to the casino and playing roulette and you playing the colors. That's really what it is.
I get what you're saying, that you gotta be okay with it going to zero, but I would not be buying an option if I thought it could go to zero. That, at least me, when I was trading options, I felt that I was making a good decision every time I bought one.
I do agree with that, but what I mean by that is you got to have the emotional discipline to see that red and say, I did my research. I know that what I thought was true 2 days ago is still true. So I'm going to stay in this. Because there was plenty of times when we first started and we would buy an option on a Monday. On Tuesday, it didn't do what we thought it was going to do. So we freaked out. We closed our position. And then on Wednesday, it did what we thought in the first place. That was the first lesson we learned was if you did the research to buy the option in the first place, then you got to be willing to stick with it through your expiration.
You got to trust your research.
Yeah, and I think people look at options the same way that they looking at this currency trading now. And it's like a
Forex.
It's like a get rich quick thing. It's not. It's way more complicated than that. Like I said, I paid a tuition worth of money to learn how to trade options.
Yep.
Shit, yes, you
A lot of money. A lot of
money.
A lot of money.
And the worst part about it was making so much money. I swear I have stories for days. Like every Monday I would put up like it was so sweet that I was putting up bands.
No. Don't say numbers, brother.
Oh, yeah. Like
don't say numbers.
Man, it was so sweet.
I remember though. I remember those conversations. I remember.
We had it going pretty good. Like right now, I am trading them, but I'm doing technical charts. So that's not something that a regular person shouldn't be trying to do that. And two, I'm only doing it with like very small amounts of money. Like
right.
I'm just playing the swings, taking my 15 or 20% gain, getting out. It's not like
That's hard too. That's hard too. To take your 15 and 20 and get out, that's hard.
Yeah.
It was definitely times where I could be trading options with Tesla, and I'd be like, man, Tesla normally run up $20, and yeah, I'm up 20% right now, but I think I could get 70. You know what I'm saying? Like, and you might miss it. Like, Trump might say something crazy, and then that's
all bad.
Elon Musk might drop the N-word. Anything can mess up.
He a wild card. When you got wild cards involved, anything can happen.
Man, in options, it's just too many things that can just go wrong. So I need a pattern. Me personally, I need stable market and a pattern.
Okay, so I'm gonna sum everything up so we can close. I mean, I really appreciate y'all time. This was dope. We're gonna have to do this again for sure. Gonna have to do this again. So, point one, 401k. If it's down right now, don't panic. If you in our age group, you a young professional. You are doing this for over a longer period of time. So this one quarter is not gonna kill you. if you now might not be the time to just jump into the market if you a first-time investor thinking because stocks are cheap to buy them up, right? You might want to use this time to utilize some resources available to you, which you guys spoke on, specifically Ron's book, in order to look into, get an understanding on how to look at and evaluate stocks. So then when we start seeing a little bit more of an improvement and a little bit more consistency one way or another, you'll be able to act and move in a way to make some money. You know what I mean? You guys got any closing points you want to touch on?
I think we covered everything I think we covered everything.
Where can we purchase a book, Ron? Where can we purchase a book? We got to let the people know where we can purchase.
Apple iBooks. I don't have out of hard copies, and I haven't took the time to put it on Amazon. I'm a busy man, so
give us the title one more time.
One day I'm gonna get it on Amazon. I'm gonna get Apple iBooks though. You can get it on Apple iBooks.
And it'll be a link in the description of this video to purchase the book as well. Richard, anything else you want to close out with?
I would just say for anybody who watches this that is already invested in the market and you've done the research already, take advantage of this opportunity. It doesn't mean that you open positions right now, but start positioning yourself, and cash is king. So have liquidity. So that way, if you do see a buying opportunity, you're not waiting. Rome alluded to something earlier where he said he kind of missed on stock. What he means is that there was a price he wanted, he couldn't get it at that price, and he refused to chase it after. So we also don't want to chase the stock at a price that we don't want it at. So just make sure you're ready for and primed for the opportunity if you do have the liquidity.
Cool. With that being said, man, I really appreciate y'all. I think this is a lot of great information. People are going to really enjoy this. Y'all have a great day, man. Everybody take care. Stay safe. Stay home. We want to see this thing stop, and hopefully everybody's being safe, man. Take care.
You too, man.
All right.